Welcome to the Transparent FX Academy. I'm Nick, and I'm a top author on TradingView with over 190k reputation points. In this video, I will be taking a pair, breaking it down from a technical and order flow perspective to try to understand where we have the highest probabilities of the next potential move. And in doing so, I will provide as much free education as possible. So I really suggest that you stick to the video to the end, and I will see you on the charts. In today's video, I want to speak about EURUSD because at the moment we do have quite interesting price action and structure. Jumping straight to the chart, what we can notice in fact is that at the moment we have just broken below a very important monthly structure level. In fact, this zone was acting as previous support here, again support here, again support here, again here, and as the market was respecting it here, it failed to continue to act as support. The market slided below it, and at the moment we had a confirmed break and close below the support, at least from a monthly perspective. But not only that, we can also notice how the last monthly candle just created this pattern here. Now, usually when you see a candle like this with a very long wick and a red body, you usually expect the next candle to fill in the wick and create more bearish continuation. So from a monthly perspective, everything seems very bearish. Now, if we drop down on the weekly time frame, we can see that from a weekly perspective, we first had the creation of this overextended M pattern. After the creation of the overextended M, we expected a correction at least to the 0.382 of the Fibonacci taken on the impulse. From a pattern perspective, which in fact we consider the market created, actually we went all the way up to the 50%, and after that we could expect more bearish continuation for the completion of this impulse correction and impulse pattern to the downside, which at that point would also create the wick fill that we already expected by looking at the monthly time frame, because a move to the downside would obviously fill in the wick that we have just identified on the monthly. Now, if we drop down on the daily time frame, what do we see? From a daily perspective, we can see that during this move to the upside, the market clearly created at this level a deceleration, which could also be a horizontal distribution, after which more bearish continuation could be expected. If we go and see what we have when it comes to the commitment of traders, so the COT data, which is what the non-commercials, so the biggest speculators in the market are doing, and we check the data for the euro, we can see how with the last reports, net positions dropped quite drastically. We went from having 52.2k net positions with 236k longs compared to only 184k shorts, all the way down to now having minus 38k net positions with 230k shorts compared to only 191k longs. So from a euro perspective, everything seems pretty bearish, and we could expect more bearish continuation. Now, in a situation like this, I did speak about EURUSD a couple of times in the past. I spoke about it after the creation of this W. We wanted to see a completion of the neckline and then a rejection higher. That is exactly what the market did. And by the way, I will link in the description these two previous analyses, so you can go and check them out for more free education. But at the moment, in a situation like this, where from a technical and institutional perspective, so COT perspective, we have seen that there is good probability for a potential move to the downside, how we could be approaching a situation like this. Now, as usual, trading is reactive and not predictive. The monthly, weekly, and daily combined with the COT data, those are the best time frames from a directional perspective. However, when it comes to confirmations and entries, the best time frames are the intraday time frames, so 4 hour and lower. Therefore, what we could be doing is monitoring price action from an intraday perspective during this move to the upside, waiting for the market to shift from an intraday bullish market like we have right now to an intraday bearish market. And if the market would shift from an intraday bullish to bearish market and provide to us one of our valid entries, at that point we could be looking for a potential rejection to the downside for the completion of the weekly impulse correction impulse pattern to the downside, and for the market to fill in the wick on the monthly. Now, if you don't know what I'm speaking about when I speak about valid entries and shifting timeframes and stuff like that. That is all part of the mentorship program, which you can find at transparentfxtrading.com. In the mentorship program, you will get all the rules of the strategies, also my entire course. And you also have the possibility to gain access to one-on-one mentoring, VIP market breakdowns with the Telegram signals, the COT data software that we just used in analysis, as well as the trading station software, which puts together everything that you need all in one interface. And if you scroll down past the testimonials, you will see that at the moment I'm running a massive promotion in which you can gain access for only 97 euros. And since I have partnered with the forex broker Blueberry Markets, if you open an account with them, you also have the possibility to get a full refund in your trading account of the mentorship program price. So if you scroll down, you will see that you have the possibility to join here and gain automatically access with the email and password that you will create during the checkout. So definitely looking forward to have you on board. If you enjoyed the video, make sure that you smash that like button and comment below. It really does help with the YouTube algorithm, and I will see you in my next video.